Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 4th of February 2020, so yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. So I've just read a bit of it, so I'll let you read the rest. I'll give you a few minutes for that. Okay, also, just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there, and I believe you can find something useful there for yourselves. Right, now then, let's jump into the charts. Now the first one I want to touch on here is the German DAX. Now I've looked at this one last week on Thursday, and what I was saying then was that if we get a nice drop below this area of support here, and let me just zoom in, if we get a nice drop below this area of support and a good drop below the 200 EMA here on the 4-hour chart, now this is where we could start considering the downside here, because in a way it could create more opportunities for this one to move towards the lows of January, to initially towards the lowest point of January near the 12,948.50 territory, somewhere around there, or it could even travel to the lowest point of December near the 12,886 zone. So again, of course, the idea still remains on the table. The only little problem I would say here is that the indices the cash indices are now recovering, because we had a nice strong recovery in Asia, but of course the big question, for how long this recovery could last. And for now, looking at this picture and looking at the cash index, we can see that the price is balancing around the 13,000 and 130 zone, so basically just slightly above this little level here that I had previously, but still below the 200 EMA on the 4-hour chart. So in a way, as long as this stays below this, well, we will consider something like this, such a scenario where if it continues to trade below that 200 EMA, then well, we could see another round of selling here, and potentially, as I said, a test of that of these two areas, the lowest point of January and the lowest point of December. Now if it travels back above the 200 EMA, still all this territory right here could still be a tricky one for both sides, to be honest, for bulls and the bears, because on one hand it could show show willingness to travel further north, but the only thing is, for us to get excited about the upside, well, we would need to see a push above the 13,400 zone first, before considering a possible move back up towards these levels here, the ones that we saw in the around mid-January. So that's why, guys, for now, in terms of the upside, we'll take a very conservative approach and wait for a push back above the 13,400 zone. In terms of the downside, yes, we'll keep on monitoring this 200 EMA on the 4-hour chart. If the price struggles to push above it, then we may see another round of selling. For those who are more on the cautious side, what you could do here is, of course, wait for a drop below the last week's low near the 12,974 mark, and then a break below this would confirm a forthcoming lower low, and yes, we could start aiming for further declines. But again, for now, stay a little bit more on the cautious side. let's see how this is going to play out near this 200 EMA on the 4-hour chart, and yep, we'll take it from there. If it holds, we could see another round of selling. Gold. Now, I talked about gold yesterday in my trader's tea time, and basically what I was saying that was that if this shorter term upside line holds, we could see maybe a nice rebound earlier here and the pushback towards the 1594, 1595 zone. But as you can see, this upside line broke. So in a way, we can actually get rid of it so that it wouldn't be in our way, because it was still a bit of a tentative one. So now the focus will fall on this one here. So again, it's also a very tentative one, because on one hand you can draw it, this one's taken from the low of the 14th of January. So on one hand you can draw it this way, but on the other hand you can still draw it that way, guys, by basically connecting this low first. So and then yep, you could keep an eye on this one, see if it actually holds. But still, what I was saying yesterday, that in order for us to get excited, let's say with the downside, well, with deeper extensions to the downside, a drop below the 1563 level would be required. That's near the low of the 29th of January. Also slightly around there, a little bit further. Let me just put this one on the chart. So 1563, that's this low of the 28th of January. So basically roughly around this territory, guys, 1563, 1564, something like that. A nice good clear drop and ideally a close below this area could in a way open the path towards lower levels. So for now, keep your eyes on this one, keep your eyes on this upside line and all this territory right here, and let's see if gold can travel a little bit lower, but then if it can rebound from this territory. For now, we are going to lean more towards the downside, a little bit more, as I said, towards this upside line, and then we'll take it from there. If we get a nice rebound, then yes, we will aim for the upside again. If it gets broken and if this line gets broken, then well, I mean, further declines could be possible. Quick mentioning of Bitcoin Cash. Now, I'm not going to spend too much time on this one because I've talked about this one yesterday in my trader's tea time. I just wanted to quickly show you guys. Yesterday I was talking about this potential squeeze here, and you look at how even more squeezed this pair. Oh, sorry. Well, actually, yes, this pair is getting. So how long this crypto is getting. So basically we can draw something like this here, a potential kind of triangle pattern where, as you can see, the price is coiling up right now. So what we're going to do here is, of course, we're going to wait for that pop. We're not going to rush into this yet, because from the very short term perspective, if we get a nice push above the 300, or initially of course through the upper side of this triangle and then through the 393 barrier, well, then we will consider a possible move towards the 404 zone, but if which is the high of the of January, the highest point of January. But of course, if that's just seen as a temporary obstacle on the way, then well, I mean, we could start considering even higher levels, and one of the higher levels could be, and let me just quickly put this one on the chart. One of the higher levels could be this target right here, around the 428-29 zone. So something to consider if we get that pop to the upside. Now, if this decides to drop lower through the lower side of the triangle, now we will keep an eye on this little level here, the 374 zone, because a drop below this could in a way lead towards this this medium term, the short term upside support line taken from the low of the 3rd of January. Now we will consider that move first, and of course, if it fails to withhold, then yep, further declines could be possible. But again, the long story short, guys, wait for that pop. USDCAD, also quick mentioning, I talked about this one in my trader's tea time yesterday. So USDCAD here had a fantastic move to the upside. It managed to break one of our targets here at 1.3270. You can see how well it traveled here higher, but it didn't quite reach our other target, our main target, near the 1.332728 zone, which is the highest point of November of last year. So in a way, of course, don't get me wrong, given the sharp uprise, we may see a bit of correction here before another leg of buying. And in a way, this level here, the 1.3270, comes in perfectly. So it's currently around today's pivot, which also could be a nice area of support. And if we get a nice rejection around here, and this could in a way lead towards this 1.332827 zone, and then of course we'll take it from there, see what he wants to do after. If by any chance this suddenly starts dropping lower, starts dropping back below the 1.3250 zone, well, I mean, of course we'll consider maybe a potential move lower. Now previously, yesterday, I was talking about this level here, but to be honest, given the sharp uprise that we already had, so we can actually lift that potential mark, or should I say potential, actually we could lift this arrow towards this mark from which we could consider the downside again. So if we get a drop below the 1.3250 territory, yes, this in a way also could place the pair below its 21 EMA here on the 4-hour chart. And then yep, I mean, more bears could start joining in here, and especially if we start seeing a drop below the 1.3218 zone here, yep, and this is where we will consider a possible slide towards this short-term upside support line taken from the low of the 7th of January. So in a way, long story short, basically that's the area that we will focus on for now. In terms of the downside, we might change that, we might reevaluate things again, but for now, at this point in time, yep, this is the area for the downside. But from the very short-term perspective, we are keeping an eye on a potential correction first before another leg of buying, because we do have a fantastic target here near the 1.3328 zone. So keep your eyes on this one. USDCHF. So also I talked about this one last week, and I was telling you guys to keep a close eye on this little area right here, roughly between the 0.9623 and the 0.9641, because all this territory here acted as a fantastic area of support, and you can see now the pair is pushing a little bit higher. The only thing is what I mentioned previously when I was talking about this pair was the fact that if this pushes above the 0.9713 zone, now this is where we will consider a possible move towards this upper bound of the range that the pair is currently trading in. But of course, in order to get a little comfortable with higher levels, then yes, a break of that upper bound would be needed. But for now, we are still inside this range, and we're far from the upper bound. So that's why we're gonna wait for that scenario. From the very short-term perspective, as I said, if it pushes above the 0.9713, then yes, we will aim for the upper bound of the range. Now, that said, don't get me wrong, if the safe haven Swiss franc will get some attention again from investors, if the equity market starts sliding, then, well, I mean, we could see a nice reversal here back to the downside on this pair, and then yep, we could see a drift lower. The only thing is that probably from the technical side, what we're going to do is just wait for a drop below the 0.9623 zone before considering the downside, because this would confirm a forthcoming lower low, and yep, we could start aiming for much lower areas. So that's why, guys, for now, wait this one out. It could present itself with a nice opportunity, but we're waiting for the correct break. GBP Euro, also I've talked about this one yesterday. Just a quick recap on this one. So what I was saying, that if we get a drop not only below this upside line, but also a drop below this area of support here near the 1.1780, this is where it could become a little bit more interesting for the sellers, as this might increase the pair's chances of drifting further south towards the 1.1689, or even towards the lowest point of January near the 1.1631 zone. So for now, it seems that this is the game plan unless the pair starts pushing back above this 1.1780 zone and back above this short-term tentative upside line. So still, in order for us to get comfortable with the upside, we need to see a push above the 1.1922 zone before considering a potential move higher. So that's why all this territory could be somewhat of a neutral one for us a little bit. So that's why in the downside scenario for us here is the more attractive one at the moment. GBPCHF. Also something to keep in mind here, and yesterday of course the pound sold off in the evening, and we saw the pound sliding well back below this key area of support near the 1.2591 zone. You can see that this morning it tested the area but failed to kind of push above it. The pair today is already trading below its pivot, so basically a lot of negatives here for this pair. Overall, it is still below its 200 EMA on the 4-hour chart and basically below all of its EMAs. So again, like I said, a lot of negativity surrounding this pair and in the pound in general for now. So that's why we're going to be very careful. The only thing is that to get excited about the downside, well, ideally we would like to wait for a nice good break and maybe even ideally a 4-hour candle close below this area right here near the 1.2525 zone. A drop below this would confirm a forthcoming lower low, and yes, could open the path towards initially towards the 1.2460, which is the low of the 14th of October, if I'm not mistaken here, or it could even drift further south, but we'll reevaluate this again if we see a drop below this level. For now, still we're cautiously bearish, because we need to see a clear break below this barrier, the 1.2525 zone. EURUSD finally. So with this pair, it is also a little bit tricky because yesterday we had a nice slide to the downside, but as you can see, I was talking about this level right here, the 1.1039, because what I was saying that if we get a nice drop, then we could consider in a way further declines, but the drop happened. We did get a breakout here, but you can see that neither of the 4-hour candles kind of closed below this. So that's why the downside still is could be on the table, but probably not now, because ideally what we're going to do here now is we're going to wait for a nice good close, at least of a 4-hour candle below the 1.1039 before considering a potential move towards the psychological 110 zone or even below that. In terms of the upside, still the same story for us, is we need to see a push above the 1.1095, 96 zone here before we could examine the upside again. So that's why, guys, for now be very careful and wait for the correct move, because at this point it's very tricky. On one hand, it could be doing just a temporary correction before another leg of buying, but on the other hand, maybe it's just finding this downside line too hard to overcome, and we could see deeper extensions to the downside. So for now, keep your eyes on these two levels that I've just mentioned, and let's see how this is going to play out. Okay, so I hope you found it useful, guys. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my Traders Tea Time, as always, 14:15 GMT. For now, I hope you have a beautiful trading day, and I'll see you later. Thank you very much, and bye-bye.